All right, let's dive right into Toyota's latest earnings because they present a really fascinating puzzle for investors. You've got sales climbing, but profits, they're in a free fall. So why? Well, the answer really boils down to one single massive number, a trillion yen hit from tariffs. Today, we're going to break down how Toyota is fighting back and most importantly, what it means for your investment.
So let's get right to the heart of this thing, this disconnect. Because if you can understand this, you'll understand the entire report.
Okay, let's start with the headline number that's grabbing everyone's attention. For the first half of the fiscal year, operating income just plummeted by 18.6%. That is a nearly 460 billion yen drop, a really significant blow to the bottom line.
But, and this is the crazy part, that's only half the story. During that exact same period, sales revenues actually climbed by 5.8%. So you've got more money coming in the door, but less of it is actually making it to the bottom line. That right there is the key puzzle we need to solve.
This brings us to the core of the report, what the company itself is framing as opportunity and challenge. The opportunity? Well, that's pretty clear. Strong global demand for their cars. But the challenge? It's a massive external shock that's putting their famous operational resilience to the ultimate test.
So, let's really zero in on that challenge, because as the report makes crystal clear in this section, biggest headwind, there's one factor that overshadows absolutely everything else, the staggering impact of U.S. tariffs.
And the scale of this headwind is, well, it's just staggering. Management put a number on it for the full fiscal year, a negative impact of 1.45 trillion yen. That is a direct hit to operating income. And to put it in perspective, that's nearly 10 billion US dollars.
Now, what's really powerful about this slide is how it puts that number in context. Just look at this breakdown. The company's own improvement efforts are adding a positive 909 billion yen. Great. Currency fluctuations? That's a negative 555 billion. But that tariff impact at a negative 1.45 trillion yen just absolutely dwarfs everything else. It's the defining variable for this fiscal year, period.
So how do you respond to a $10 billion problem? Well, during the earnings call, CFO Kenza Khan was very clear. He said, "We really should not panic and try and respond hastily by raising prices. That's not our way." This tells you everything you need to know about the core Toyota philosophy. Absorb the shock with operational strength, not by passing the cost right on to your loyal customers.
So okay, if they aren't just raising prices, how in the world are they fighting back? This brings us to what the company sees as its counteroffensive, which is being driven by what they call three growth engines inside the business.
These are the internal forces pushing back against that massive tariff headwind. First up, strong sales and a profitable model mix are expected to add back 320 billion yen. Second, their legendary cost reduction efforts, they're going to contribute another 275 billion. And third, a really crucial and often overlooked area, their expanding value chain profits is kicking in almost 200 billion yen.
And that sales strength is just undeniable, especially in electrified vehicles. But what's really driving the growth here? It's the hybrids. You know, while the pure EV market is showing signs of cooling off globally, Toyota's HEV sales were up over 9% year over year in the first half. That just shows incredibly resilient demand for their core hybrid technology.
And this quote right here brilliantly illustrates that third engine, the value chain. We're talking about service, finance, and parts. CFO Kenza Khan highlighted this on the call, pointing out that the business built around their 150 million cars on the road has become a 2 trillion yen contributor to operating income. This is a massive, high-margin business that provides an incredibly stable foundation.
And it's not just a one-off thing. This timeline shows consistent, powerful growth in their value chain profits. It's moved from 1.6 trillion yen just a few years ago to over 2 trillion yen today. It's a key source of stability and strength for the entire company.
So with all that context, let's look at management's future playbook. How does all this build into their forward-looking strategy, and what are the signals they're sending to the market?
This right here, this is probably the most important slide for any investor. Just think about it for a second. Despite taking a 1.45 trillion yen tariff hit, Toyota raised its full-year guidance. They actually bumped the operating income forecast by 200 billion yen. I mean, you can't get a more powerful signal of management's confidence that they can navigate this storm.
Management was also really upfront about rising costs. They acknowledged that, yes, tariffs and new investments have pushed up their break-even volume, but Right in the same breath, they announced new company-wide initiatives focused specifically on improving productivity and bringing that number back down. That's a clear signal they are laser-focused on long-term efficiency.
And finally, what does this all mean for shareholder returns? The message here was direct and really positive. The interim dividend is up, the full-year forecast is up, and they are doubling down on their stated policy of increasing dividends in a stable and continuous manner. In such a volatile environment, this is exactly the kind of commitment to capital return that long-term investors want to see.
So let's put on our analyst hats and distill all of this down into the Wall Street view. If you're building an investment thesis, what are the absolute key takeaways you need from this report?
Okay, here's the bottom line. First, that 1.45 trillion yen tariff impact, that is the number one risk you have to model. Second, the company's operational strengths are providing a significant, powerful buffer against that risk. Third, that upgraded guidance is a huge vote of confidence from management. And finally, strong hybrid demand is proving to be a critical competitive advantage right now, fueling outperformance while others are struggling with a cooling EV market.
And that leaves us with the billion-dollar question for the future, doesn't it? In a world where the pure EV transition is proving to be slower and a lot more complex than anyone predicted, is Toyota's long-standing hybrid-first strategy now looking like a stroke of genius, or is it a long-term liability? This earnings report really puts that debate right at the center of the table for every single auto investor out there.